TV18 shows the scale of disruption is only growing.
There is a gap down opening to begin trade with. The Nifty opens at 24,620.
I still don't think now is necessarily the right time to start buying.
Expect to continue growing at this number or higher because we see tremendous acceleration with AI progress.
We expect this operating leverage and we doing AI on ourselves and making ourselves more productive.
JP Morgan is maintaining its neutral weighting on Interglobe Aviation. They're given a target price of 4,630 rupees.
The company has said that the negotiations with the government have been completed and the proposal has been taken up for approval by the authorities.
23,500 is a key Fibonacci retracement level which needs to be honored.
I think with more phases coming in, I think we've got another price move to the top side, particularly for oil.
As we said, it's been quite range bound since the start of the trading session.
Well, 1 hour to go. That was the day so far. Hello and welcome to Closing Bell. We're coming to you live from the CNBC-TV18 Motilal Oswal studio. I am Reema Tendulkar. With me is Mangalam. It's been a difficult week, right? It was a truncated week. We had 4 trading sessions. Of the 4 trading sessions, in 3 of them, including today, markets have been under pressure. Yesterday was the only session where we had a bit of a relief rally playing out. Today, since morning, we've had that gap down opening and markets haven't really had any sort of a recovery or respite. We opened around 24,600 and that's where we are with 1 hour to go. The good part is at least the mid-cap index hasn't fallen today. The mid-cap index is flat and the advanced decline ratio is 1:1. Hi.
Hi, Reema. You know, there are 2 ways to look at the market right now as we move towards the end of this week. The first couple of days of this week, which included the holy break as well, so Monday and Wednesday if you must, where there was a fair amount of panic, a lot of selling, and on a daily basis you had way more stocks declining than the number of stocks advancing. You know, it was that
Nifty was down between 300 to 400 points on those 2 days each.
Those 2 days each, exactly, right? And yesterday there was that relief rally that came by. Obviously, you know, it's not sustaining at higher levels, but today as well, while we're down about 170 points, we're a fair distance away from, you know, the low that we hit, the panic low that we hit on Wednesday morning as well, which was 24,303. So let's see, 305. Let's see where it goes from here on. All depends on the weekend. You know, lovers of India would want just one thing. From a stock market standpoint, some sort of de-escalation coming in on the weekend, and there'll be a gap up on Monday if that was to happen. And the second part is obviously as we move towards, you know, the finals of the T20 World Cup, you'd want India to win as well. So a double bonanza for everyone who's watching the channel would obviously be de-escalation over the weekend and the India win. Let's see how that goes. So after that up move that we saw in the mid-cap index yesterday, today as well, the fact that it's not falling as much tells you that maybe we have a bottom in place. The question is whether we, you know, go higher from here on or not.
Okay, Europe for now is trading in the green, so that's positive. The CAC, DAX and the FTSE roughly higher by nearly about 0.5%. And even the picture across Asia wasn't too bad. Korea closed flat. Hang Seng was up over 1%. Let's tell you what we've lined up on Closing Bell. 1 hour to go. Stocks succumb to selling pressure. The Nifty extends losses to hover around 24,600. The broader market is lackluster following early outperformance. Financials, realty are the top sectoral drags today. India's aviation sector takes a knock as war-led disruptions escalate flight cancellations. Brokerage release cautious takes on Interglobe Aviation on the back of ATF fuel rise. Details coming up on the show. Muscat Docks is resilient in an otherwise weak market. P-75 submarine order negotiations are near finalization, say the company. Meanwhile, DCX System bags an order worth 68 crore rupees from HAL. Comprehensive analysis on the defense sector, the order books and the pipeline coming up on the show. But 1 hour to go. How should you position yourself in the last hour of trade? Mitesh is now joining in. Mitesh, afternoon. What trades have you taken today? What would you advise?
Good afternoon. I think, you know, I just heard Mangalam talking about, you know, hoping that there is some kind of de-escalation news. My only worry in this entire thing is that, you know, that's certainly possible, but I think the only worry is that the Bank Nifty is breaking to lower levels. The Nifty, you know, made a low of 24,305 on Wednesday, and today we are roughly about nearly about 300 points higher than there. And the Bank Nifty intraday low on Wednesday was around 58,393, and it's now at about 58,220. So, and Bank Nifty also, this 58, 200, 250 zone is a very important support zone for Bank Nifty. So I think if the Bank Nifty closes below that, while the rest of the pack, and you can see that pharma and defense are not falling as much, but the rest of the pack might do okay. The banking stocks could possibly experience their first leg of correction, which in turn will put pressure on the Nifty as well. So I think right now, what I would like to watch and keep a close eye upon is the Bank Nifty index, and the trading call which I have has a sell on ICICI Bank with a stop at 1335 for targets of 1280 and a buy on DDL. That's Bharat Dynamics. On a mild decline, it's moved up slightly more. So around 1355, if you get it about 10-12 rupees lower, buy with a stop at 1325, buy around 1355 and look for a target of 1410.
Right, we take that point. And the Nifty Bank is a very pertinent point raised by you, Mitesh, on that underperforming right now. It's about 700 points away from its 200-day moving average. Well, the Nifty is below the 200-day moving average. So usually on the technicals, the Nifty Bank leads the Nifty. This time around, the Nifty has fallen a lot lower because of the IT pack, and the Nifty Bank now following that. The question is whether it goes there or not. If there were signs of some sort of de-escalation that were to happen, then the immediate impact of that would be on crude and the rupee. Both those factors would then perhaps improve the macros of India, and that would then reflect in Nifty Bank is what logic would suggest. But let's see how that goes as well. Right now, too, as we speak, the rupees at the lower end of today's trading range so far, closer to 91.68. We take your point. But a couple of individual stocks are doing extremely well. The stock of the week, definitely from the frontline end, has to be BEL, up 6.5% in a market like this. The other one is Reliance, which is just below the 20-day moving average. And the stock of the last hour or so has been United Breweries as well as United Spirits. Both those Alcobev companies come up for you on the screen. Favorable comments coming in from, the Karnataka state government when it comes to the budget, and favorable budget policies as well. More positive for beer than just spirits, but generally positive for Alcobev. Chartically, do you have a call on United Spirits and United Breweries, Mitesh?
I think, the United Spirit stock is something, which I typically end up tracking. And that's where, I think you also have exposure in the futures and options segment. Before this fall happened, in the month of February, we saw the stock price of United Spirit make multiple highs around this 1425 level. So when the reversal started, I was looking at a target of around 1425. We got a high of 1418. So I think 1425 is an important level. Once it starts closing above that, and that's certainly a possibility because today the candlestick is a huge one. If it happens in the next 1 or 2 days, then I think the stock could see further rally and possibly head towards 1500 odd zone. So 1420-25 is the first level to watch. Above that, a fresh long trade can also be taken.
Thank you very much for that, Mitesh. We'll come back and chat with you. By the way, in the oil and gas complex, Reliance Industries has been strong for 2 consecutive days. And the other one is MRPL. Very strong rebound visible in MRPL. We've seen a rise in Singapore GRM. So MRPL, Chennai Petro coming in for buying. MRPL in particular is up 7.5%. While Chennai Petro has a gain of about 2-3%. Oil marketing companies are subdued in trade because despite the increase in refining margins, they're getting hit on account of a cut in marketing margins. They were, before the rise in crude prices, the marketing margins for oil marketing companies was positive. And now, because in this week itself, crude prices have gone up by $12-13 per barrel, now the marketing margins of oil marketing companies will come under pressure, which is why you are seeing these companies subdued. But Reliance Industries has been a big supporter. But let's talk about aviation, because data accessed by CNBC-TV18 shows that 2,325 flights have been cancelled between 28th of February to 5th of March due to West Asia airspace disruption. Madiha joins in with more details.
Well, 7 days since the conflict started, and it has caused major turbulence for global aviation, not just India. The impact has been huge, but the severity is understood with numbers, and the exclusive data accessed by us shows the scale of disruption. So since the 28th of February till the 5th of March, over 2,300 flights have been cancelled due to airspace restrictions across the Middle East. Out of these, 1,770 flights were cancelled by Indian Airlines, while 555 cancellations were by foreign carriers. carriers. The passenger impact is also massive. Nearly 3 lakh travelers have been affected so far, and around 16,000 passengers were stranded across different Gulf airports as of the 5th of March when we accessed this data. Airlines have been trying to bring passengers back. On 4th March alone, 28 inbound flights operated from the Middle East brought back about 5,300 passengers to India. Now, if we look at the day-wise cancellations by Indian Airlines, the numbers clearly show how severe the disruption has been. On 28th February, about 196 flights were cancelled. This jumped to 348 cancellations on the 1st of March and 357 flights on the 2nd of March, which was the peak of the disruption. After that, 319 flights were cancelled on the 3rd March, 269 on 4th March, and on the 5th March, airlines cancelled 281 flights. If we break this down airline-wise, Indigo accounts for the highest cancellations at 806 flights, that followed by Air India Express with 580 cancellations, Air India with 229, SpiceJet with 123, and Akasa Air with 67 cancelled flights between 20th February and the 5th of March. And the reason this disruption is continuing is because several critical airspaces in West Asia are still either closed or operating with heavy restrictions. So Tehran, Baghdad and Damascus remain shut till the 7th of March. Tel Aviv's airspace is closed till the 9th of March, and Kuwait and Doha are operating rolling closures depending on the security situation. So their airspace also remains closed. The UAE is partially open. Jeddah is accepting flight diversions, and Muscat is open but with operational restrictions. So for now, airlines are still rerouting flights, cancelling services and reviewing alternate air corridors to bring stranded passengers back to India, which means the disruption to travel between India, the Gulf and even Europe could continue in the coming days.
Take that point, Madhya. Thanks a lot for that. We also have, Vinny joining in with what brokerages are making of this development and the impact it could have on Interglobe Aviations. Another, weak stock all of this week has lost a fair amount. Vinny.
Right, so Interglobe Aviation obviously has continued to be under pressure since we have seen the West Asia war intensify. Now we have brokerages that have written on this as well. JP Morgan, they're maintaining their neutral rating. They've cut the target price to 4,630 rupees per share. One, they remain cautious on this overall aviation play as well as Interglobe Aviation. Why? It should, they believe that the company maybe could continue to face headwinds on the fuel cost side as well as the non-fuel cost side as well. They believe that there is limited scope now for a rise in terms of yield as domestic air traffic that has started and has remained a bit tepid during this time, as well as international traffic also has moderated. So that becomes a bit of a concern in terms of yields improving. So obviously jet fuel prices that has started rising again in Feb 2026, and that becomes a concern because fuel cost is one of the important costs for aviation companies, Interglobe Aviation as well. And other than that, rupee, that also, if it continues to weaken, that also becomes a problem for them. So obviously these are some of the issues they've highlighted. So they're cutting their FY26, FY27 EPS by 13 and 14% to account for higher fuel costs, and they expect oil prices to moderate in FY28, leading to a modest EPS cut to 4% or 4% as well. So that's what JP Morgan is saying. Now, UBS has also written a note. They're maintaining the buy, but they've cut the target price to 5,480 rupees. Ongoing conflict, obviously something they believe will weigh on the ask rate for the company in the near term. Crude prices a concern. Again, they have also highlighted, and they expect the headwinds to begin impacting the earnings in Q4 FY26 itself. So that will become a bit of a problem in terms of valuations. Though they said that long-term Interglobe Aviation, the story for that remains intact, but short-term, maybe we could see some pain.
All right, Vinny, thanks a lot for that. Rahul Chadha, founder and CIO, Shikara Investments, joins us now on the show as well. Rahul, Interglobe Aviation, I mean, travel and tourism was a sector that everyone loved, but Interglobe Aviation, ever since the disruption that took place in, the early part of December, since then the stock has corrected about, 30% from the highs. Do you think it had run up too ahead of what the opportunity was, or maybe now the street is becoming more aware of the downsides or possible disruptions in this space and not just the opportunities?
Yeah, no, I think longer term, the space has huge potential. Again, it's hugely underpenetrated compared to elsewhere in the region or global benchmarks, etc. You're absolutely right. Last 3-4 years, the stock was almost a 5 to 6 bagger, and which is where some pullback was warranted. What we've seen is last 6 months, bit of a disruptions also play out. We had the India-Pakistan skirmish. Then there was a bit of a softness in travel demand, etc. We are looking at a strong base for Q1 of this year on back of the Kumbh festival last year, etc. But I think one would be looking to buy the space here. These names have corrected 30-40%, whether it's Exigo, Make My Trip, Interglobe. I think for some of these names, market was worried about the fear from agentic AI and the disruption from AI. I think somewhere those fears are unfounded. These companies are good competitive companies. They have a moat in terms of, again, the infrastructure they have, etc. So I think at these levels, risk reward remains favorable for these names. And our view on the Middle East conflict also is things should subside or significantly ease in the coming weeks.
All right, Rahul, thanks a lot for that. There's a view coming in on Interglobe Aviation. You do think that it is, you're constructive on this space, and this dip may be an opportunity to go ahead and sip into that. But speaking about sips, you know, you have the Karnataka government, which has introduced the alcohol in beverage excise duty structure. What this basically means is that it's, it's a very disruptive and an important structure that has been announced. Why is that? Because so far in India, alcohol across all states has been taxed on the volume of alcohol that you buy and not the proportion of alcohol that there is in that. So basically, if you're going to buy a bottle of whiskey or a bottle of beer, whatever be the amount, 650 ml or 1 liter, etc., the tax will be on that and not the quantum of alcohol it contains. And that was always a negative for the beer companies, largely because a 1 liter bottle of beer would have, say, 5 to 10% of alcohol, depending on the alcohol that beer has, versus, say, spirits, which would have over 30, 40, some even 60% of alcohol. So, you know, on a per unit basis, beer was a lot more unaffordable than the other spirits. And the government then has, perhaps basis the way the companies have projected themselves, etc., decided that this alcohol will be, taxed on the alcohol content as against the total volume. And to support itself and smoothen the transition, they've given about 3 to 4 years for, this change to happen. And Karnataka is important, accounts for nearly 15% of the country's IMFL volumes. And we had spoken to UBL about this before as well. And as soon as this news came, the company told us that it's definitely a step in the right direction and fairly progressive, though we still await more details on the slabs, etc., how that plays out. While it's a definite positive for the beer industry, the overall stance is also a positive for the alcobev industry. Why is that? Because, you know, they have announced reducing slabs, pricing slabs from 16 to 8 as well. There are deregulations which are taking place, so the state won't direct prices for beyond those 8 slabs. So companies have the freedom to price the alcohol the way they do, the entire alcobev space. They're also looking to tap into alco beer tourism. Distilleries and breweries will be allowed to host tasting sessions and sell products directly to tourists on their premises. So across all the comments that have come in so far, the government has been a little more supportive than, punitive on this space, and that's reflecting in the kind of upmove that we've seen in all these stocks. So be it Allied Blenders or United Spirits from a spirits perspective, but United Breweries, that's the one which is at the high point of trade with a gain of almost 7%. Back to Rahul again. India is the only market right now where, because of the per capita and, the macro conditions, this is a space which is attractive. But always, on its head hung the sword of regulatory action. Do you think this one step eases out that bit of fear, at least because if it's a slight opening in the door of Karnataka, it could mean that all the other parts of the country may also look into it?
Yeah. So I think you made a fair point. Globally, if you see, the consumption of alcohol is kind of going down. You don't see Gen Z millennials consuming that much alcohol. But India is the only market where you have volume growth. I think where investors were waiting or holding out was because of the regulatory uncertainty. I mean, alcohol was an easy thing to garner tax revenues, etc. But the move which we've seen in Karnataka is a progressive move. So if we see most states following that, suddenly the sector would be kind of a non-radar of most global investors. It becomes attractive. So clearly, this is a positive move. You need to see more of this for it to become meaningful for investors to act here.
Rahul, hi, afternoon. This is Reema here. You think once the Middle East uncertainty, those clouds lift, Indian markets will do well? because we've gone through a period of underperformance for the last 15 months. This was the added blow in the last 1 week, the rise in crude prices, etc. But you think, what is your expectation once it settles? Maybe we have some de-escalation. How will India perform?
I think what is also weighing for Indian market sentiment is this impact from AI disruption.
Correct.
Normally, if you look at rest of the region is kind of a flat to marginally down. But for Indian markets, if you look at domestic cyclicals, they're particularly weak today. In a previous scenario, one would get buying here because look at these are attractive levels for these stocks. Markets already underperform. I think what is weighing for most global investors' mind is how does AI disruption play out? How does it impact the country, etc. But our view is, look, this is going to be slow in terms of how it hits the job creation, etc., in terms of how it causes dislocation. And as the earning traction continues in India, and as you see tier 2, tier 3 kind of cities doing well, the confidence will come back up. So the way we look at, again, this year is that, look, right now everybody's focused on the AI winners, which is the semi companies from Taiwan, from Korea, etc. But somewhere around mid of this year, the trade would move to the AI adopters. And that's where some of the Indian companies will also talk about how they're using AI to improve their productivity, to improve their back end, front end, etc. And I think that's going to excite market. Underlying numbers are not weak. I mean, from October onwards, there is a pickup in the economy. But I think it's the sentiment, it is the fear of this AI dislocation, which is dominating everything. Near term, maybe crude moving from what, $65, $70 to about 85. But we believe that move is temporary. That should ease in next 3 to 4 weeks. I think it's more of how the economy kind of faces up to this challenge of AI disruption, which is on mind of most global investors. And to be fair, there were parts of India where valuations were expensive. And now that this disruption is on the card, there's also a reality check coming for some of these small mid caps.
So what would you look to buy? Rahul, can you hear me? What would you look to buy then?
Okay.
Once this settles, what is...
Yeah. Financials become attractive. Clearly, I think the leading private banks, having gone through a year of underperformance, credit growth coming back. Last year was a year where they had pressure on NIMs. I think the NIMs are going to be a lot more resilient here. You'll have a reasonable NII growth anywhere between 10 to 15% for them. So those become interesting. We are overweight on industrials, particularly the manufactured export stories. I think those gain significant traction from here. We continue to like the hospital space in India. Again, there may be some softness here, there, quarter, etc. That becomes attractive. And some of these consumer internet names, I mean, names like Eternal here, some of the travel names, they have significantly corrected from the highs. There's a lot of fear on the huge amount of disruption from agentic AI. But look, these are smart innovators. These guys are themselves category disruptors. They've got a huge, I would say, back end for somebody like a Blinkit to go and to distribute their products. So it is very naive to assume that OpenAI or a LLM sitting in US or Europe can disrupt all these business models. So there's going to be some impact here and there, but these are smart companies and they've gone through a number of challenges. And I think this is a time where you're getting these great businesses at super attractive valuations.
Okay, stay on. We want to talk about delivery-related plays. Mazgaon Docks, DCX systems are all surging. There is order-related news flow, and the sentiment towards defense has also been higher globally, not just in India, on the back of the war. Ria is now joining in with more. Ria.
Well, yes, today the defense index has been buzzing. It is up over 3% today, and since the start of the conflict in West Asia, the index is up almost 5%. Now, in terms of the big movers today, of course, we have Mazgaon Dock first up. It is up over 6% today. This is after yesterday's 9% move, and after reports about the 1 lakh crore P75I submarine order, the company has issued a clarification saying that the negotiations with the government have been completed, and now the proposal has been taken up by the authority for further approval. And once this order comes in for them, the order book could go up by over 5 times. So that will be a big positive for the company. DCX Systems is also up over 11% today after winning an order worth roughly 68 crores from HAL for the manufacture and supply of custom-made antenna and power supplies for airborne applications. The company stands at a very healthy order book of 2,600 crores. And just in the last 1 month, the stock is up around 20%, although it is down 21% for this year and down 35% since its listing in November of 2022. Apart from this, a lot of other defense stocks are also buzzing in today's trade. Bharat Dynamics, MTA Tech, Garden Reach, Data Patterns, Mazgaon Dock, even Centum Electronics, all of these are up anywhere between 6 to 7%. And even Paris Defense, Apollo Micro, Cochin Ship, Midhani, all up around 4% each. If you look at the biggest movers since the start of the conflict in West Asia, Paris Defense leads the pack with a gain of almost 18%. Even others like Data Patterns, Mazgaon Dock and Solar Industries are up anywhere between 11 to 13% each. And all of these other stocks on your screen are also up anywhere between 2 to 8%.
All right, Ria, thanks a lot for that. Rahul, you did speak about some of these stocks which were impacted by war but could have been better attractive levels right now for you to enter. What do you make of these defense stocks? They've been doing extremely well through the war and even better thereafter. Though they have corrected a bit from their highs, they're still a distance away. But the last month or so, it's been a big move and which has only accelerated right now.
Yeah, I think this is a space which is going to do well for the coming years. Like we own some of the Korean defense names in our portfolios. And if you look at the stocks which we have in terms of the artillery stocks globally, or these interceptor missiles, all these reports which are coming out, those stocks are almost at a critical level in terms of the ammunition, etc. So that whole rebuilding, that whole restocking, for India particularly, this whole indigenization of defense spends is a multi-year theme. So at times you will see valuations looking almost preposterous for some of these Indian names, and it's hard for us to reconcile and buy these names. But the theme is a multi-year theme. So if you get pullbacks, again, these names got to be 3 to 4% of the portfolio. So I would say pretty much like how we treat precious metals, you need to have at least 3 to 4% of your portfolio in defense stocks. I think our challenge with some of the Indian defense names is it's hard to find valuations which are comfortable. We are finding better value in some of the Korean defense names here.
And also, they are very long gestation orders. So there is a lot of volatility and lumpiness in the execution also. But thank you very much, Rahul, for joining in. We will slip into a break. On the other side, Tushar Pradhan of Hexagon Partners will join in to talk about markets and more. Stay tuned.
Coming back, a bunch of stocks which are buzzing around right now. You can add Hindustan Aeronautics to that list, which is now flown to the high point of trade with a gain of almost 3.5%. One of those underperformers in the defense space, but now is picking some up in terms of moves as well. But speaking about some of those top movers in the market, Hormaz as always joins in with that list. Hormaz.
It's a forgettable week for the markets, but for some stocks, it's been a fairly good day. Ircon International being one of them, and the entire railway space has been buzzing today. If the small cap index, the top gainers have belonged to the railway space, be it Jupiter Wagons, be it Ircon, still 10% higher. The company's issued a clarification as well with regards to news of its merger. The biggest single day gain since June of last year, the second straight day of gains for the stock, and yesterday the stock had snapped a 7-day losing streak in yesterday's session. Today's volumes are the highest in over 2 months. 5 crore shares have been traded now on Ircon in today's session. The 20-day average is only 16 lakh shares, and only 12% of those shares are marked for delivery for Ircon, at least as of now. And the underperformance has been such that even after this 10% move today, the stock is still down 60% from its July 2024 peak, which was at 350 rupees. Defense as a theme has done well all through the week. Solar Industries is one such name. It is the second best performer on the defense index this time around. It's gained every single session in this truncated week. 6 out of the last 7 sessions have been positive for the stock. The best week for the stock since July of 2024. So it's a double-digit gain for the week for Solar Industries. Volumes for the week are the highest since May of last year. Today's session, we've had 3.5 lakh shares that have been traded. The 20-day average is just over a lakh, and close to a third of those shares are marked for delivery. And over the last 12 months, the stock has done fairly well for itself, gaining around 65% during this period. And lastly, United Spirits, the news flow driven name over the last couple of hours. At one point, the stock was up 7.5, so recovered around 8.5% from the lows of the day in just 60 minutes. They snapped a 5-day losing streak last year in yesterday's session. On the FNO side, the premiums on the 1400 call option have gone up. The open interest edition also has been the highest on this one. The volumes today are the highest since the 31st of October last year. Close to 33 lakh shares have been traded today on United Spirits, the 20-day average being just around 3.5 lakh shares, and close to 40% of those shares are marked for delivery. The stock recovering from the lows is still down around about 16% from its 52-week high levels.
No, Hormaz, we'll just come to you, but the ferocity with which the market is selling off, just as you were talking about these buzzing stocks, the Nifty Bank actually broke below that 58,000 mark now, 57,943. It's down 1,100 points, and that's had a bearing on the Nifty as well. The Nifty is below the 24,500 mark. Just when we started the show, in fact, just before Hormaz was speaking as well, the Nifty was holding around 24,600. So that big gash has come just about, in a quick succession of 2 to 3 minutes, and that has had a bearing on the mid-cap end of things as well. The mid-cap index wasn't falling as much when we started the show. Now the mid-cap index is down 0.2%, and the story of the day would be, or the last few minutes would be reflected best if you pull up the crisscross lines. When we started the show, those lines were firmly interlocked with an equal number of stocks advancing and declining. Right now, we have 1,700 stocks which are in the red for about 1,200 stocks which are in the green. So the street definitely not taking any long positions into the weekend for fear of uncertainty. We don't know what happens from here on right now, but the Nifty Bank is now closing in on that 200-day moving average of 57,500 thereabouts. So it's been a big cut that we're seeing. The Nifty down 300 points. So it's the last 30 minutes of trade on a Friday which have, the bears come up once again and say, okay, we won't let the bulls take any positions home.
Well, yesterday was the bulls on top in the last 1 hour of trade. And today it's the bears taking control completely. Tushar Pradhan, Director Hexagon Partners, is now joining in for our segment Alpha Managers. Thank you very much, Tushar, for joining in. So at Hexagon Partners, how have you all read the impact of the war on India? Hard to say how long it's going to last. But, what positions have you all taken a defensive stance on the back of these developments? Because India is directly connected with respect to remittances, the crude dependence. It's an export destination as well for many jewelry companies, auto ancillaries and auto companies.
Yeah, so I think the most important thing is that this was completely unpredictable. So it's very difficult to make any kind of advanced changes to the portfolio. And anyway, what we look at in Hexagon are really long-term compounders. So in that sense, all these events which can cause tremendous amount of volatility in the short run do not necessarily change our long-term approach to portfolio construction, which is essentially looking for companies which are long-term profit compounders. Now, as you mentioned, some of these companies are directly related, fundamentally related to the actions in the Hormuz Strait, or the fact that they're exporters and all linked, in the global economy in that sense. I just want to remind all of us that, COVID was a period where everything was interlinked. Almost the entire world came to a standstill when it came to production. And then it got its reflection on the stock market, which was down almost 39% in a matter of 3 months. However, what you have to remember is that the long-term nature of companies do allow for any of such things to happen and impact price in short. I think what is most important for investors to realize is that the earning capacity of any company can get impacted in a quarter, 2 quarters, even over a year, if things, globally manage to disrupt situations. But the fact is, if there is a demand for your product and you have a significantly well-managed enterprise, I think in the long run, we just have to undertake this volatility as part of the game. I don't think there's anything definitive about the stock prices at any point of time. And that's the approach that we've taken, that we haven't changed our portfolios too much at all.
Right, you haven't changed your portfolios much. You did say that, these are opportunities to build long-term compounding portfolios because of the volatility. Is there anything that you guys were looking at, perhaps gave a pass on due to valuations, which is now swimming into your ken? Because we're seeing disruption, value dislocation in a lot of these sectors and themes.
No, that's a very good point, Mangalam. I think one of the things that I'd like to bring to the discussion is what we were worried about. Even about a year ago, was the metric we call as the Buffett ratio, which is the market cap to GDP ratio, where it had gone up to almost 1.3 times, 1.38 times. Today, if you look at the 4.1 trillion economy that we have expected to grow at 7%, it will take it to about 4.4 trillion by the end of next financial year. And if you look at where the market cap is, it is actually approaching 1.1 times. So which means we have significantly corrected from the overvaluation situation. And exactly to your point, that there are opportunities now which are looking far more attractive than what they were looking at. It's not as if it's become deep value. I think we are going from an expensive range to fair value. And typically as markets, they don't wait at fair value, right? So markets are not logical. So if fear pushes the valuation even further down, I think that is the time that investors should really take heed that potential return in equities in India, for example, from that point onwards, if at all the ratio falls below 1, of course, but even if it starts approaching 1, I think that's the time to really start taking significant bets. And we are talking about a time frame of between 3 to 5 years where you can really expect significantly above average returns. If you buy at fair value, I think you'll go along with what the average return on the market is. If you buy below fair value, you actually beat the longer term average over a period of time. So I think that's the hint that one should.
Do you think there's a possibility that the entire texture, of Middle East changes post-war? Because one of the agendas seemed to be to bring out not just a regime change in Iraq, but it's now engulfed even the other countries in the region. And if that happens, will it change the investment thesis? Because Middle East was also attracting a lot of capital. There are many connections between Indian companies and Middle East. I mean, is there, just throwing it out there, in terms of, have you all thought about the possibility that the long-term picture of Middle East changes? And if yes, how could it?
Yeah, I think however exciting this might be as a topic to discuss, I can continue talking about it for some time. But when it comes to investing, and especially the focus on India, I think all of this contributes to noise, according to me. I think when it comes to looking at geopolitical situations, equations as they change, you have to remember that they always keep changing. So essentially, we are talking about a multipolar world from a bipolar world that we talked about 10 years ago. That is the reality. I think what we are seeing now is more of that as it comes along, and it is changing even long-established situations in the Middle East, which for a long time had kind of remained the same for some time. So I think now most of these states will start to look at a new way to do business. And if at all, I think that puts a foot in the door for Indian enterprises, which either were in the past not really part of the section in terms of evaluation, or for the fact that now these changing equations gave a lot more opportunity to Indian companies. Those are the things that we really are focused on. Is that if anything of that nature changes, what are the companies which will take the benefit of that going forward? And I think we see some of the sectors, especially in projects, in terms of large engineering, as well as metals. I think there is a significant amount of opportunity coming up, which will adjust to the new situation as we see develop. I think that's the focus that we continue.
All right, take that point, Tushar. Thank you so much for that. Just a final one before we let you go. What are the major avoids in a market like this?
Yeah, I think whatever is export-oriented, obviously, comes under a cloud. But again, I will caveat that with saying that that's near-term in nature. So, for example, the entire Strait of Hormuz is blocked. I mean, what it means is a direct impact to all companies which are exporting. But the point again here in India is that we were not so much linked to export activity into the Strait of Hormuz. And if at all, I think the biggest, I think the people who got hurt most were the refiners, the people who carried oil, etc. But listed universe in India is not so much directly impacted by what happens in that route as well. It is really the third and the fourth factor impact, which is because of the slowdown of this trade, what it means for other projects, etc., which is what we have to worry about. So I think from an avoid perspective, I think any company which is involved in exports right now, which has already taken a hit, by the way, you don't really have time to move and adjust to that, has already adjusted downward in terms of adjustment to the new normal, which is probably lower volumes for exports, etc., and the hit that you're taking. However, on the other end, a weakening rupee kind of buffers it to a certain extent, but obviously business is much more important than the rupee value. So I think that is something that I would avoid, but nothing much more than that.
All right, take that point. Thanks a lot, Tushar, for joining in and giving us your views. The market's extending its cuts, no respite. The Nifty down 300 points now, and the Nifty Bank actually is down about 1,250 points as well, below that 58,900 mark as well. We're on the verge of breaking 57,800 now. So, there's a big cut that we're seeing, and it's only accelerating as we move towards close. So, perfect time to get in what, the D Street chatter is. Nimesh, what are the dealing rooms saying? Is it just long unwinding ahead of the weekend?
Well, not sure it's only long unwinding ahead of the weekend, but I guess, Mangalam, the biggest surprise for today's market was the Nifty Bank down 2% and massive selling in the bank stocks. Yes, there is selling in some select bank names like Kotak Bank and a couple of other names, but there is no specific reason. I tried speaking to some analysts as well on whether there is any specific reason for the Nifty Bank to fall 2% in today's market, but no specific explanations for that. But I guess that's the reason why after the gap down, what has dragged the Nifty further lower is the Nifty Bank and the banking stocks. Having said that, the feedback seems to be that the Nifty seems to be in the range between 24,250 on the downside and 24,850 on the upside. So it's a 600-point range in which the Nifty is trading off late. Has to decisively break either of those levels for a directional move for the Nifty from here on. So that's overall sense. From a flow perspective, again, it's a mixed day. As I said yesterday as well, I'm not sensing a very large selling from the larger institutions for that matter. But again, that seems to be done today as well. Surprisingly, the sector that stands out for me in terms of flows is the power sector. There is good amount of buying in the power range in today's flow perspective from the institutional investors. So no specific reason for the power stocks to do well, or at least not to do, if not to do well, but the flows are quite positive. No specific reasons. But what surprised to me the most was the Nifty Bank down almost 2% in today's market.
Indeed, and the PSU banking index is also down 2%. And this week, the PSU banking index has seen a correction of 5.5%. And now the weekly tally on the Nifty is a cut of 3%. Nifty, Sensex and mid-caps down 3% this week. Nimesh, what have you picked up on individual stocks?
So while you spoke about Nifty Bank under pressure, and surprisingly that's been the case, the one stock which is actually outperforming of late is Karnataka Bank within the banking names. It's up in a weak market, it's up 2-3% in today's market. Yesterday the stock was up 4-5%. It's been buzzing off late. I understand some larger HN has been buying off late as well in Karnataka Bank, and the city is anticipating some corporate development as well. There could be a possible board reject as far as the Karnataka Bank is concerned. So that's the buzz as far as Karnataka Bank. The second name is ICICI Bank. Maybe this is the one stock which is dragging the Nifty Bank lower as well. The stock is down more than 3%. There were multiple blocks in the morning trade, but my sense is that in those blocks, that was the last selling from a leading FI. So they've completely sold out in ICICI Bank. That's the buzz as far as flows are concerned. The third name is JNA XL. It's been consolidating in a narrow range, but maybe in the weeks to come, you might see a very large block. Nearly 10% equity is likely to change hands in JNA XL very soon. And the last is Kirloskar Oil. This is one stock in the cash market which is actually hitting fresh highs, almost at 50-week high now. And even at these levels, today there was very strong buying interest from larger FIs. So expect high delivery volumes, and looks like this is backed by FI buying in Kirloskar Oils.
Thank you very much for that. So many mid-caps are now collapsing. Jindal Drilling 10% down, LT Foods 9.5%. Raymond Realty has sold off 6.25% down. Vedant Fashion 6%. Tejas Networks, which started rallying last week after winning that order. Then there was that data center news. But Tejas Networks seeing pressure today. That's down nearly 5-6%. Wakefit Innovation 5.5%. MediAssist, Gaudium IVF, one of the recent listings, small company, stock lower by 5%. Sugar names like Dwarikesh Dhampur under pressure. Godrej Properties, year-to-date loss now stands at close to about 17-18%. So mid-caps are selling off rapidly on pretty large volumes. But the problem is the Nifty Bank, which is now down 1,300 points, 2.2% gone on the Nifty Banking Index. Get into a break. On the other side, we'll get you a few BTST calls. Stay tuned.
Well, the market fall is accelerating. 57,740 now for the Nifty Bank, 1,300 points lower, over 2.5%. So it's a big cut that we're seeing on no, formidable spike in the volumes yet. So we need to understand how much of that is, just an impact cost because of the aggressive selling that is taking place without an equivalent buying on the other side, or how much of that is, actual transactions which are taking place on the bourses. We'll know that only once we have, data that comes by post-market close this evening. But the real-time tick-by-tick data from a volume standpoint, I suppose Mitesh would have on his charts. Mitesh, you did say that the fall on the Nifty Bank looks scary. It is turning out to be that right now. Very close to the 200-day moving average, just about 200 points away. 1,300 points it's fallen. 1,500 points would take it to 200-day moving average. Where do you think it goes from here? And is it largely on higher volumes, or is it just the impact effect?
Yeah, I think, one, Mangalam, I'll avoid the technicals and the impact side, but the volume and the impact side. But, what is important is that the volume is slightly lower than yesterday, but the Bank Nifty hadn't corrected at all. Last few declines, I think the Bank Nifty managed to always bounce back from these levels of around 58,200. And with every passing week, the indicators were turning negative because very clearly, I think, the upside wasn't happening as well. So the momentum, the force was declining, which means that this, decline was possibly on the cards. You rightly highlighted the very important 200 average mark, which is 57,500. That should be the first target. And we have a mild gap around 57,000. And then, important weekly level at about 56,500 or so. So I think these are the levels which I'm watching. There's some more downside left, and I would not say that the decline will get arrested over there. Yes, you might get a bounce back on those levels, but I think this is a chart which is showing slightly medium-term reversal. So I think eventually we might even look at lower levels, but in the near term, these are my targets.
Okay. The contribution chart tells you the story of the day. Draggers, 1,287 points, all of them. No single Nifty Bank stock which is in the green right now. In fact, all of them stacked up on just one side itself. But your buy today, reverse on Monday call would be what? Would it be BTST, STBT? How do you play it? Given that over the weekend anything can happen, just look at the prices.
Yeah, so I think, very clearly, and you have news flow to contend with, which can be, a statement which came like yesterday. So I think it's a very tricky market, but given the fact that most of these stocks are breaking down, I think we should still be trading on the negative side. So IndusInd Bank, we were just talking about the banking names. IndusInd Bank has broken the key support levels on 2-hour, 3-hour charts. So I think, keep a stop at about 925, take a target for about 9 for Monday. And defense stocks are doing well. We had BDL as the call earlier. BL can be a simple BTST with a stop at about 464 half, 465 and a target of 478 to 480.
Thank you, Mitesh. In case we don't speak again, you have a lovely weekend, and let's hope for the best on the war and the World Cup. Moving on to Linde India, they have said that minority shareholders have rejected the company's proposal to enter into related party transactions worth 417 crore rupees with an affiliate, Praxair. Sonal joins in with the details.
It has been ongoing for years now, this merger with Praxair that Linde Global Company did. And since then, there has been an indication that minority shareholders are not happy with it. They do not like, or they say that these transactions with Praxair are not done at arm's length and are favoring Praxair. And that's why in the recent shareholders meet, it was rejected, the 417 crore transaction with Praxair. Around 89% shareholders voted against it. Only 10% were in favor. One of the group companies, the BOC Group Limited, the holding company, was not allowed did not cast their vote in this resolution. Now, do remember, it was in December that the SAT had upheld Linde India's related party deals order that was given by SEBI. They dismissed Linde's appeal challenging SEBI's action on related party transactions, and SAT said that Linde's interpretation of testing related party transactions was contrary to the provisions that were provided by SEBI, and now the order is with Supreme Court. Now, since this has been going on for a long time, we spoke to some experts. Shailendra Haribhakti was of the opinion that the only way to solve this issue of related party transactions is to merge Indian Linde entity with Praxair so that that problem of related party transaction goes away. And Anand Tandon of IIAS said that now shareholders have become more active. They will ask about future profit shares. They will ask about capital allocation and other aspects of business as well. So this is an important update that has come by for Linde India, and the stock continues to be on our radar.
Take that point, Sonal. Thanks a lot for that. We'll take a short break, come back and focus on the markets. Anand Tandon joins in on the other side for Market Close.
Welcome back. 4 minutes to go before we wrap up trade. Anand Tandon is now joining in. Anand, thank you for waiting by. We came to you a bit late, but banks have borne the brunt of the selling pressure. Any banks which look attractive to you after the sell-off?
One thing, you should be looking at banks from a point of view of a daily trade, but if you are looking at it from a part of a portfolio, I think all the top banks are still something that you need to consider. It is the largest sector in the market, and therefore will have to continue to remain a disproportionate part of the portfolio.
All right.
Interglobe Aviation, the stock got hit in the month of December on account of the pilot issues, the rostering. And now with this 10% correction that we've seen today, the stock is even lower than the price that it was in the month of December at the peak of the chaos and crisis. At what point should one start looking at Interglobe Aviation, considering its dominant share?
Well, the dominant share may be in India, but the reality is that a large part of the international business that you could be looking at is gone. Also, to the extent that the planes that are supposed to be arriving are still, not really going to be meeting that kind of thing. The growth that were potentially there is also likely to slow. In a situation like we are in, where the dominant fear is geopolitical, it is not necessarily the best sector to be looking at. Yes, if you do get my own base case scenario is that we are looking at another 5 to 10% downside overall in the market. And that kind of volatility will give you a lot of opportunities for stocks to buy, not necessarily those which are deeply cyclical.
All right, take that point, Anand. The short conversation effective as well. We are saying the base case is that there could be another 5 to 10% decline in the market from here on as well, and that would mean a deeper gash for a lot of these other stocks. We'll probably, look at that. Let's try and close the market for the week right now. The Dow futures, as we speak, have extended their losses. Now they're down by over 200 points, and that's reflecting in our market as well. The last hour of the last day of this week's trading session, the Nifty's down 300 points, led lower by the Nifty Bank, down about 1,300 points in today's trading session itself. And it has been soured. The mood has been soured in the last hour, led by the Nifty Bank. So if you look at, HDFC Bank, SBI, ICICI Bank, Kotak Bank, all of them down anywhere between 2 to 3%. Reliance is the lone supporter to the bull run.